We often get asked by our US viewers, how do you guys trade gold and indices on a regulated broker? To trade gold, indices, and more, we trade using Webull. And for US citizens watching now, for a limited time, you can get free stocks if you use our promo link that can be found in the description or dropped in the live chat right now. Webull is our top pick and personal choice when selecting a broker here in the United States for stocks, indices, and commodity trading specifically. Get your free stocks now by clicking the link and signing up using the instructions found there. Now, back to the show.
Okay, what's up, people? Hope everyone is doing well. Unfortunately, it's no Nick today. I believe he's at a wedding or something of the sort. So no Nick, unfortunately, but you do have me. And as always, guys, we'll go through a bunch of markets. Today, I'll share my opinions, what I'm looking at. Of course, if you do have any specific pairs, let me know. Any time frames in particular you want me to take a look at. I'm a very technical based trader, so I'm very focused on the price action leading me into a bias or into a trade. So I'm going to go over a bunch of markets in detail. Yen pairs, USD pairs. We'll take a look at some indices, crypto even. So if you are interested in a particular pair, don't hold back. But we'll start with okay, some requests coming in now. We'll go through some of the USD and we'll take a look at some of indices as well, gold and silver, of course. I think I'll start with the DXY and then we'll work away from there. Now, the DXY has been interesting as of late. Of course, it has been a pretty bearish market. We have been falling since actually the turn of the year. Jan 2025 is kind of where we topped out, and the market has been falling ever since then. I'm not quite convinced on the market continuing to fall. Yes, we are still bearish. The market is still putting in lower highs, and from that regard, I would still deem this market to be bearish and potentially might still continue. But I'm also seeing signs that the market is starting to run out of steam, starting to fatigue. We're getting very corrective nature of this trend here, frequent pullbacks, deep pullbacks, and not really seeing much momentum to the downside as we once were seeing earlier in the year. So that does tell me that, okay, dollar's running out of steam and possibly it could be time to see a bit of a pullback. So for me, myself, I'm waiting for some upside. I'm looking for opportunities that do favor some dollar strength. I wouldn't say we're quite here yet. I'm not necessarily jumping into any buys just yet with the dollar. I like the fact that we have broken out of this descending channel. That's obviously a sign that says, okay, the bears are weakening. Buys are starting to gain a bit more strength. We're breaking through some technical structure now. So that's a good sign for the buys, and perhaps we could see more upside. But we're running into a bit of trouble, failing at resistance. Momentum is slowing down. We're seeing ugly wicks as well from yesterday. And overall, it kind of looks like a bit like a consolidation there. So I need to see a bit more momentum with the DXY. If I am going to go counter trend, if I am going to go for not necessarily a reversal, but go against the trend, I'm going to need to see a bit more momentum from the dollar. So that's really what I'm looking at before I do take any longs, backing up USD strength. So maybe shorting euro, shorting pound, which we'll take a look at in a moment. But I do like dollar to the upside. I'm not so much keen on keep shorting it. We may see another swing to the downside. That could well be the case. But not really interested in shorting unless I see a strong push down for the dollar, like a really meaningful move down. Similar to the moves that we had here early in the year, really convincing bearish pressure. If I can see that come back into the market, then yeah, I'll be interested to sell the dollar again, because at that point there's more life coming back into the market. I can be looking for a retest somewhere and a continuation. So that would convince me, but I need to see some real strength in another bearish move. If it's another corrected move down, that won't interest me, and I'll still be looking for a push higher up. If I go right to the higher time frames, you can see there is actually a long-standing trend line which the DXY is testing, which I think is quite interesting. This is on the monthly chart for the DXY, starting way back in 2011. We connected this swing low here as well, and we're testing that trend line here again. Potentially if we do see a bounce, that could be a meaningful move to the upside there for the dollar. So I'm quite interested. DXY buys, like I said, a bit more momentum before I really get behind it and start looking for entries myself, but that's kind of what I'm leaning towards. yeah, that's really what I'm leaning towards. So in terms of some other USD pairs, we'll take a look at some indices as well. I saw someone requested Aussie dollar and euro. We'll take a look at those. So Aussie dollar's been a little bit interesting. I don't think interesting is the right word. It's been quite chaotic. I think that's a better word to sum up Aussie's price action. All over the shop, back and forth, back and forth. We've been operating within this channel. We've had a couple of attempts to break out. One over there, a second more recently. Hasn't really given us much success in that breakout. We're back above the low of the channel. Perhaps you might see another swing to the upper end, and that's really been the theme of the market. So if you're looking to trade, didn't mean to delete that. If you're looking to trade Aussie dollar, I think the best way to tackle it is just looking for kind of shorter term trades off the lows or off the highs of the channel, and not looking for anything too meaningful, anything too significant, because the price action is awful, really. It's not like we're trending well. Yes, there's a slight trend to the upside, but you can see how corrective we are looking. And that's not the best trend you'll see. So yeah, with Aussie dollar, now that this is looking like another fake out, a repeat of this move here, I would fancy another push to the upside, probably back into resistance, and then we'll go from there. Maybe we come back down, maybe we test the up end of the channel and then come back down off that. In terms of trading opportunities, I like the idea here, because when I am looking to trade markets that look quite choppy as this, I want to make sure I'm kind of well away from the noise, finding entries away from all the chaos where everybody's fighting. I want to be kind of outside of that, where I can get a nice safe stop loss. Not that will be the perfect entry, but at least it will allow me to be at the edges of all the noise. And if price was to push in my favor, it will help out my risk reward as well. So this is really where I want to take my trades, at the top of the channel. I'll wait to see if price can get there. There might be some nice buys on the way up, as we've just had that fake out, but really the price action is not that great. To be honest, it's not my favorite USD pair. Euro, I'm keeping an eye on that one. Like I said, I'm kind of looking to short euro. It lines up with my bias for the DXY. If I'm expecting the dollar to gain strength, then naturally I'm going to be expecting euro to lose strength and see more downside. This one, very similar price action to the DXY. We broke out of this ascending channel here. So same situation, correctively moving to the upside. So I'm not really optimistic about the buys for Euro USD. If this was more of a convincing trend like we saw early in the year, really healthy momentum, healthy momentum over here. If I could see moves like that, of course I'll be looking to buy the market, because the trend is still healthy, still likely to continue. A move like this, of course, still can continue, but not as likely. And again, I'm always about quality over quantity. So when a market is showing me signs of tiring, becoming more corrective, frequent pullbacks, not seeing as much momentum, I'm going to be looking for the counter trend opportunity, or at least just kind of sitting on my hands. And at the moment, I am sitting on my hands with euro. But should we see more convincing momentum to the downside, I quite like the idea of some pullbacks and some more downside. Somewhat of a head and shoulder pattern. You've got the left, the head, possibly a right shoulder could form. That would be the neckline of the pattern. So something like this would tickle my fancy, but a lot of work needs to be done. The important thing is seeing some more strength to the downside. There is a counter trend line, which I'm keeping an eye on, because maybe if we see a strong break of that would be a sign that, okay, the buyers are entering the market again. And perhaps we do see another swing to the upside for euro, back to highs, maybe even beyond that as well. So that is something to keep an eye out from a bullish standpoint, a strong break of that counter trend line. But if the market can maintain these lower highs, as we've been doing for the past couple of weeks now, and see us pick up momentum, and of course see the dollar pick up momentum as well, then yeah, I'm looking for pullbacks on the DXY, more upside, perhaps a retest of that area. And then I'm looking at pretty much the same thing for euro, just inverted really, a push down, a pullback, again, probably to retest that area, and then some more shorts. So I'm leaning more towards the downside for Euro USD. Same thing for pound as well. Pound USD, euro, very similar pairs. Pound USD, I like the look of it. This one looks like it's forming a really nice head and shoulder pattern. So you got the neckline running through the market there. You got the left shoulder, you got the head, and now I'm looking for that right shoulder. So hopefully you can find some opportunities in this area at 1.355. And then again, looking for a big move to the downside. We've got some resistance running through the market there as well. Perhaps we might come back and test that. I quite like this area here too. This is where we had a brief consolidation and saw some nice momentum on the way down. So you can see I'm leaning towards the bearish side of things for the USD pairs, or the bullish side of things for the dollar itself. I wouldn't say we're quite confirmed yet. I'm still waiting for a bit more momentum on the DXY just to really confirm things. Just because the breakout hasn't set the market alight really, so it would be nice to see momentum pick up, and then we can speak about some buys off the back of that. In terms of some of the indices, I quite like US30. I actually mentioned US30 quite a lot yesterday on Nick's stream yesterday. I quite liked it. I believe we were trading around here somewhere, and I said it would be nice to see price maybe come back and retest support, maybe form a double bottom, and I can use that as an entry to go along. The reason why I like US30 quite a lot is because we haven't made new all-time highs yet. The S&P, NAS, they've made all-time highs, and they've just been slowly, grinding away, creating high after high after high. US30 has been lagging quite some bit behind, although we have seen a lovely breakout and some really nice momentum as of late, but still yet not to take out the high. So there's opportunity there. I'm expecting the market to do something, and it's likely to do that, and it hasn't done it yet. So there's opportunity there, but we are looking pretty bullish right now with US30. So if you're looking to trade this, it might be a situation where you're looking more so for a breakout opportunity for a trade, because I'm not too sure if we get the opportunity for a pullback and a nice push back into support and buying off the low. It might be more of a situation where you capitalize on a breakout, then maybe see a swing back to 45k. So still very bullish on US30. It would be nice to see a push back into support here. That would be, preferred area, because not only are you entering lower down, you probably got a safer stop loss, maybe risk rewards better. Well, it would be better in terms of buying from here to the high rather than buying from here to the high. So there's a lot more boxes being ticked, and it's a bit more favorable. But of course, sometimes the market, or not always the market's going to give you what exactly you're after. So the next best opportunity would be a breakout opportunity, something like that. But in terms of direction, I would expect US30 to make all-time highs pretty soon. I wouldn't be surprised if it's sometime next week we go and do that. As for some of the other indices, whilst we're on the topic, NAS just slowly grinding to the upside. Of course, we would expect a pullback at some stage. We're not going to keep chugging away forever. We're going to have those pullbacks. Just look at the past behavior of price for NAS 100 when new highs are created. We would grind higher for some time, then eventually get that pullback. Grind higher for some time, eventually get the pullback. New highs created, and then eventually get the pullback. Of course, that was a very large one. But a pullback is a deeper pullback is likely at some point. But the trick is, or the difficult part is, when is it going to happen? When are we going to get that pullback? Yeah, it's a question you only know the answer in hindsight. So the way I'm kind of looking at NAS right now is, okay, the market is very bullish. We're still seeing higher highs and higher lows. The momentum is still good. I think from an intraday perspective, just looking for some pullbacks and buying the lows makes the most sense, until we see some red flags, until we see some signs that, okay, NAS is going to have a bigger pullback, because there are some nice areas to keep an eye on if you're interested in a bigger swing trade. You've got the consolidation here. That looks like a really nice place for a buy. You've got the prior high as well. That looks like a nice place for a buy as well. I believe that the DAX did something similar to that not long ago. It broke the highs, retested the prior swing high, and it continued off the back of that. We could see NAS do something similar. So those are some nice areas to keep an eye out if you're looking for a deeper pullback. The thing about that is, when is the pullback going to happen? We're not to know. It could grind higher for another few weeks if it wanted to. So from more of an intraday point of view, if you're looking for opportunities, I think buys just look good on the lower time frames. There's some areas of demand here. We had a bit of consolidation, nice break to the upside, even a push back into this area, nice area of support, massive wick. I think these are healthy areas for some buying opportunities, and naturally just targeting the high there. Nothing too complicated, and we'll see where price goes there, where price goes next. But every time price does take a high, we go for a bit of a pullback, So I expect the same. pretty much there with NAS. But overall, very bullish market. Only really interested in buying, to be honest. And in terms of the S&P, I'll take a quick look at this one as well. S&P, I'm looking at this in the same light as the NAS, created new all-time highs recently as well. Still overly very bullish. Still grinding higher highs and higher lows. Momentum still looks pretty good. We've just made some new all-time highs again just recently. So yeah, I would fancy another pullback for this one, and I would fancy a pretty big pullback at some point as well. So same story with the NAS. I like this area here. I think that's a nice place for a buy. Nice consolidation, rip to the upside. I think that would be a smart place to look to enter some longs from. Likewise with the retest of the high here as well. So there's some nice areas to keep an eye out for. If you could see some pullbacks into those areas, I think they're smart areas for some longs. But we have to be patient. Don't want to try and... well, I suppose you could look for some shorts, but I think that's a very aggressive kind of opportunity. There are times to short, there are times to long. I think especially when the market's like this, shorts are always going to be very difficult. You're going to have to manage the trade very, very closely. You want to be aggressive with your exits. In terms of the buying opportunities, just waiting for another pullback, really. So straightforward in terms of the concept. Of course, actually taking a profitable trade. Not as much always, but the idea is still the same. Very consistent higher highs and higher lows. Even a push back into support here. I feel like it's a smart place for a buy. So this is very much the idea with the S&P on the lower time frames. Until we start to see evidence of us breaking lower, we're just trying to find the dips and continue momentum. So overall, very, very bullish. Expect more upsides for indices in general. Expect to pull back soon, but again, the timing of that could be difficult. Okay, let's see. We went through a bunch of USD pairs. What's up, Yusuf? Welcome to the stream. Hope you're well. Okay, we'll take a look at gold. I'm seeing a lot of gold requests in there as well. Pound USD, we just had a look at that one. Okay, I'll take a look at gold. I think silver was requested earlier as well. We'll take a look at silver too. Silver's actually the one I like the most. So in terms of gold, yeah, gold, I haven't been a big fan of gold. If you've seen some of my streams on my channel, I haven't been talking too highly of gold. I like gold in terms of the higher time frames. It's a beautiful uptrend. I'm still very much looking for buying opportunities. I've got a couple levels which I like the look of, which I'll talk about in a moment. But from an intraday point of view, I think it's just very, very choppy and very range bound and difficult to find really clean opportunities, to be honest. I like this level down here, which is 32.60. I think that's a very smart place for a buy. I also like this level down here at 31.50. Really nice level for a buy as well. So I'm kind of waiting for price to approach one of these two levels before I look for any sort of opportunity. Well, I'm only going to be looking to buy. But yeah, I'm waiting for price to get to one of those two levels before I look for any entries. In this area is where we got a lot of the back and forth, a lot of the choppiness. I just think that's a recipe of kind of giving back gains there to the market, unless you're only looking for quick scalps maybe, but anything a bit more significant is difficult because we're not really seeing much momentum. I like the buys here because if price does push to the lows of this support level, naturally because of the way we're moving, just bouncing between support and resistance, there's a likely chance, number one, we do bounce. And because I can find entries right at the low here, I can probably find a move which is actually worthwhile, probably give me a decent return on the risk. And likewise with support here, potentially could see a massive swing from this area. And if I position myself well, could be a very nice trade in terms of the risk reward as well. And it kind of position myself away from all the noise. So yeah, with gold, I'm still bullish. As I said, those are the two areas I'm personally going to keep tabs on. Whether price is likely to go and test them or not, we'll find out. But 32.50, 31.50 looks really, really good to me. Like I said, still bullish as a whole on gold. The trend is still very much alive. I know we're in a bit of a pause right now, but there's no signs of reversal, no signs that the market's about to suddenly dump. And of course, if that was to happen, I'll look to reanalyze. But right now, I'm just looking at this as a bullish market, which is simply just going through a bit of a pause. So if I can find some healthy areas to pick up some buys, I will. And those are the two levels I'm interested in. In terms of silver, silver's been very bullish as well. I prefer silver a lot more to gold because the price action, at least in my eyes, is a little bit more straightforward. We're seeing some really healthy momentum, quite a clear trend, since the low here actually, back in, what was that, early April, sorry. Really nice momentum, consolidation, nice momentum, consolidation, nice momentum again. So it looks like a very straightforward kind of trend here, very aggressive one, not really giving much of a pullback until recently. I've marked out this level, prior resistance here. I am looking for buys on the retest of that area. So I'm hoping to see if we can pull back, retest that level, and then I can look for some buys back into the high at 39.06. So that's very much the plan there with silver. Trend is up. I do expect us to slowly catch up. I still expect us to go and test those all-time highs, which we still have quite a way to go. But the way I look at silver, we've had a big consolidation for quite a few months. Price is now broken through that. So now I'm just expecting momentum to pick up until I see signs that say otherwise. So if I can find a pullback to retest 37.28, I'll be looking for some entries and some buys back into the high. And momentum looks really, really good. So I quite like the look of silver at the moment and expecting a lot more upside there. Yeah, gold is having some momentum on the 15, Yusuf, but again, it's just, I don't really see much opportunity there. There's no kind of consistency to the market structure. Just yesterday we had a lot of momentum to the downside. Price was seeing a lot of momentum lower. Now we're seeing momentum, in the opposite direction. The day before that we had some momentum as well to the upside there. The day before that we had some momentum to the downside. So gold for me is just back and forth. So I'm not seeing much of an opportunity unless you're kind of looking for like scalps and just looking for price to hit levels and quickly take a sell, only stay in the trade for a few candles and then you're out quickly. If you're looking for those type of opportunities, then yeah, I think these are not bad conditions for it because we are kind of just bouncing between multiple levels. So as we do approach resistance, if you can see some healthy rejection, sure, I think some shorts off that makes some sense. But if you're looking for like a swing trade, you're looking for a significant move on gold, I would wait for price to test some more appropriate levels, away from all the noise, where we've seen evidence of price respecting before, very, very well. Some big moves from these areas. Inside of there, I'm expecting us to kind of fluctuate until we don't really. So yeah, we're seeing some momentum right now for gold. I'm not quite convinced just yet. Maybe we do break out, but I'm not a big fan of the price action and the conditions of the market, which are quite important to me. Yeah, I agree, Lewis. Gold is very, very flat. No, I can read the comments. If you do have pairs you want me to take a look at, drop it in the chat, but no, I definitely can read the comments. So you go pushing to 3,400. Yeah, I mean, I'm looking at gold eventually getting back to 3,500, so we're going to have to push through 3,400 along the way. But yeah, if gold's going to get to 3,400, it's going to have to break the resistance here. It's going to have to break the resistance. Hopefully we're going to do that and get the ball rolling with gold, to be honest. But we'll have to wait and see. I wouldn't be surprised if we continue to consolidate, really. The market is still very, very flat, which is why I prefer silver a lot more, because I'm seeing more momentum, seeing more of a trend. So it just looks a lot easier to trade. I say easier, but easier is probably not the right word, but to some degree it is just a bit easier to trade and find entries as well. EuroCAD, okay, we can have a look at that. Sean, I just went for US30. We scroll back like maybe 5-10 minutes, you'll see the analysis to US30. I'll probably go through some yen pairs as well, because actually I think yen pairs look a lot better at the moment, and that's kind of where my focus is right now, especially looking for some big swings. EuroCAD's an interesting one. We've been bullish for quite a while, but I'm not too sure about continuing to look to buy EuroCAD because of where we're trading. Again, I always keep tabs on the higher time frames. They're kind of like my guiding compass, especially as someone who predominantly focuses on technical analysis. I think keeping up to date with higher time frames is almost crucial, really, because higher time frames are almost to a degree sort of your fundamental analysis. And I mean in terms of, what is the price doing in longer term? What are the bigger players doing? What's the overall trend between one currency to another? The higher time frames kind of show that well. And at the moment, EuroCAD is smashing into some big resistance, which we may break through and we may not. But I'd rather wait for price to break through before I continue to look to buy and follow that trend with EuroCAD. As price gets to resistance, I'm always going to back away and wait to see what price does next. Wait for evidence of price respecting or wait for evidence of price breaking through. At the moment, we're kind of neither here nor there. We've just got there. Last month's candle, June, pretty bullish, getting us back into resistance. Now July, we'll see what happens there. I mean, we're already kind of halfway through, or past halfway actually, and haven't seen too much change in the price action, which is a sign that price is kind of just consolidating. So if the trend is going to continue, I want to see signs of that happening and us kind of clearing 1.6, 1.61. If we are going to sell off and respect this, then there could be some nice shorting opportunities off the back of that. So if we could see some bearish momentum pick up, maybe some shorts and some lower highs could look good on the way down. And these are the lower highs which we're trying to get involved in, and the opportunities which we're trying to take advantage of. At the moment, we're quite flat. I wouldn't really be looking to do anything. I know that the trend is still bullish as a whole, so naturally looking to buy, but for the reason I just mentioned, price trading back in major resistance, I'll be quite cautious about looking to find a buy, or at least find a buy which you're going to hold for maybe a few days. I think if you're looking for a buy for a day, you probably get away with that, and you're looking to hold for a day or even for a session even. But if you're trying to find a buy which you can hold for a few days, maybe multiple weeks, I don't think this is the best place to be looking to enter a trade. So I'll be quite cautious of that. And if I see signs of reversal, I know this is a trade which I can really hold, because if we're going to respect this monthly level, you can see a lot of downside back into these areas here potentially. So if the selling opportunities do take shape, it's definitely a pair which I'll add to the watch list and keep an eye for some shorts myself. In terms of some of the yen pairs, I'm quite keen on longs for the yen pairs. I've had a kind of a mixed bias for the yen pairs for a while, but I've been keeping an eye on the yen basket. The yen looks like it's been weak and doesn't really look like we're about to see any major move to the upside. I still think the yen can keep falling. So if I have a bearish bias on the yen, that means pairs like pound yen, I do think we're likely to push higher. At the moment, we're trading some pretty significant resistance, so I would be quite cautious about buying pound yen because, of course, for the same reason we just spoke about with EuroCAD, we're coming into some major resistance. So I don't think this is the best prime place for a buy, especially if you're looking to hold for a bigger move. Again, lower time frames is a different kettle of fish. But I do think we're likely to break through the resistance. And I do think this will be our next kind of major targets, similar to what the Euro Yen is doing. You can see Euro Yen smash through some resistance quite a while ago actually now. But it looks like Euro Yen is on a one-way ticket to the highs up there at 175, and I think pound yen could be looking to do something similar. Most of the time, pound yen and Euro Yen are in the same boat, really. So I do think pound yen will eventually pick up, but in terms of finding buy opportunities, I'm only waiting for price to break through the resistance. Then I will start looking for some buying opportunities, because at least then, the breakout is the green light essentially. Because there is a world where we don't break through and we do push down. I could be wrong. Maybe price does respect resistance and falls over. So I'm waiting for the breakout. That would be the green light. Says, okay, we're likely are going to continue higher. Then I'm looking for my pullbacks, perhaps the retest of that area. We'll have to wait and see. Wait as the market takes shape. If the market isn't going to break through this area and we are going to sell off, then what I do want to see is a break of this trend line here. The market's been so consistent with all of these higher lows, and if we are going to break to the downside, then I want to see that trend line clear, and then I can start talking about some shorting opportunities, because not only have we broken, not only have we rejected the resistance, but we've broken through the trend line and perhaps broken through some structure as well. So at that point, the sells will actually look pretty good. But I do favor us breaking higher. But we'll wait for the confirmation before finding any long opportunities. But pound yen, I am looking for a lot more upside, just not quite here yet in terms of the buy. A lot of yen pairs at the moment, I'm actually looking for a lot of pullbacks. But I just have to be very patient with them. Okay, we'll take a look at Euro CHF for Joseph. Dollar yen, okay, we'll take a look at that one as well, Bradley, no problem. So Euro CHF's an interesting one. Overall, very kind of flat market. I do think long term there is a lot of upside to be had with Euro CHF. It looks to me that price is somewhat forming a bit of a bottom here. We've got some major support once, twice, third time, and a fourth. So to me, it looks like price is really forming somewhat of a bottom, and perhaps could be looking at maybe not necessarily a reversal, but some type of counter trend move. We have been bearish since 2018, so maybe a bigger pullback of that, even if the market still wants to continue falling. But to me, it does look like support is holding. So I quite like the buys long term. In terms of like the 4-hour chart, the way I see the market is just a range really. We've got equal lows down here. We've got more or less equal highs up there. And for the past few weeks, we've just been ranging. So in terms of opportunities for Euro CHF, it's a simple situation of just buying low and selling high. If price can come back, return and revisit this support level and then show some signs of rejection, maybe a nice wick through the low, there's always a great confluence. If you can see some healthy signs of rejection, I think that'll be a smart place to find a trade if you weren't already long potentially from this retest. And then perhaps look for a swing to the upper end of the channel. I always say when you're trading ranges, a good thing to keep an eye on is the 50% point of the range. I feel like that's a great point to book some partials if that's your sort of style, or maybe a move a stop loss to break even or trade a stop loss, because sometimes you don't always see the swing to the opposite end of the range. Sometimes price might move halfway and then suddenly fall back against you. So halfway is always a nice place to book some partials. Or just at least manage the trade somehow, maybe remove risk if that's what you want to do. But in terms of the technical analysis, it's a ranging market. Long term, I do see us pushing to the upside, so I'm more inclined to look for buying opportunities. But in a condition like this, you just want to be looking to buy low, pick the lows, or maybe wait for some breakouts. But that could take a while. So Euro CHF buying low, and looking for a push back to the upper end around 0.942. In terms of dollar yen's an interesting one. I quite like this from a longer term swing bias. I do think dollar yen's longer term move or longer term trajectory is still likely to the downside. I'm still pretty bearish on dollar yen. I know I said quite bullish on the yen pairs, and I am, and I do think dollar yen might still see some more upside, but I think long term dollar yen might still be on its way down. I'm looking at these lower highs here. 1, 2, and I think perhaps we could form a third one in this area here. Really strong, significant resistance once, twice. I would expect it to hold again and perhaps see another lower high. So there's a lot of confluence here for dollar yen, and if we can successfully reject that area, I think we're well positioned for a big short and a push back down into that support level. At the moment, however, we're looking quite bullish, and I would expect us to see more upside to get to those areas. So as I drop to the 4-hour chart, ever so slightly, price has been starting to build up some higher lows here, and we're pushing up. So I think maybe if we can get another bigger pullback, something like that could be a nice buy, because I wouldn't want to buy the market now. We are pushing into resistance, so I would want to see a deeper pullback. I mean, even a push all the way down to this area would be a nice area for a buy as well. But overall, I think dollar yen has some room to the upside. And then as we get to these areas, perhaps we can start speaking about some selling opportunities, but that'll probably be a trade for another week. There might be some shorts off the high here. Like I said, I think, because I still expect the bigger move to be to the upside, but I would say that this is a healthy level of resistance, so we might see a bit of a reaction, but I don't expect it to be anything significant. I could be wrong, of course, but my analysis tells me dollar yen's probably got a bit more room to the upside. Yen still looks a little bit weak. I'm still kind of expecting some strength in the dollar a little bit. So yeah, I'm not that enthusiastic about the shorts at the high here. We might see a bit of a reaction. I can see that happening, but I do think the bigger move will be a push higher up and then maybe some sales later on. So yeah, that's kind of where I'm at with dollar yen as well. Yeah, euro yen is on a tear. Have an entry set up for a pullback. I've been looking at trying to find some pullbacks for what's up, Orthodox. I just had a look at gold. If you scroll back probably about 5 or 10 minutes, you'll see the analysis to that. No problem, Joseph, happy to help. But yeah, in terms of euro yen, it's a pair which I've been looking for a pullback for quite a while now, actually. I think ever since we had the initial breakout, which was the end of June, so over a month now. Actually, is that end of June? Oh no, well, 19th of June, it's the 18th of July. So about a month. But yeah, since we had the breakout there, I've been looking for some pullbacks. Originally, I was looking for the pullback into this area. That was a nice kind of consolidation. Spent a few days and eventually price had a really nice breakout. But we just kept going. We just kept breaking to the upside, keep seeing high after high after high. And it's been a bit difficult because normally my trading style, I'm looking for quite deep pullbacks. I trade a lot of FX, and FX most of the time, I'd probably say 60% of the time, you'll get some deep pullbacks. I don't really like trading shallow pullbacks, especially when a trend's gone on for a while. I like to trade bigger pullbacks, and because they give me bigger swings as well. And typically that's how FX pairs move. We do have quite big corrections, really. So I've been looking for quite a big pullback, but that hasn't been the aim of the game with euro yen. It's just been small pullbacks intraday. You can see the wicks there on the daily candlesticks, slight pullbacks intraday, and then we just kept chugging away. So I've been looking at this area that didn't provide me an opportunity. Then I've been looking for the break me test of this area. That hasn't provided me an opportunity, at least not yet anyway. Maybe we do have a pullback to hit that level, but probably looking quite unlikely right now. Now I'm looking at more of a brief range here. Because there's so much momentum in the market, I don't mind being a bit more aggressive with the buys here of euro yen. If the trend was a bit more corrective and I wasn't seeing as much momentum, then I'd be a bit more cautious. But because euro yen is just storming to the upside, there's just so much bullish momentum right now, which tells me that if we do see a push down, I'm expecting the buys to take us right back up again pretty quickly. So I was expecting deep pullbacks. Now I'm not as expecting as much of a deep pullback as I normally would. I like this area here, brief consolidation, break to the upside as well. I did speak about this area here as well yesterday on my stream. Even that area didn't quite get a retest as well. It just shows how bullish euro yen has been, but we haven't made new highs yet, so this area still would be valid if the market was to correct back here. I think that's still a smart place for a buy. I also still like this area here for a buy too. Nice consolidation, spent a few days there, then eventually saw some really healthy momentum on a breakout. I think if price can get there, that will also be a smart place for a buy. And in a very unlikely scenario, I even like the retest of this level here, but I don't think we have a pullback that deep. So either 171.5 or 169.5. Those are the two areas which I like the look of for some buys. And then, yeah, targets would be back to 175 up there. So, yeah, those are the areas I'm looking at. But I've got a feeling that euro yen might just keep pushing all the way back to resistance and not give us that bigger pullback. I feel like euro yen's just in that kind of zone where it's just going to keep plugging away. If it does surprise, great. I'm going to get excited because that will provide me a really nice opportunity. But we'll see. We'll see. Giovanni, no, I'm not in a euro pound trade. It's actually not a market which I trade quite frequently. It's a pair that I look at pretty much every week, but not a pair which I trade quite frequently because it's quite a choppy pair. I like pairs that do trend a bit more. It doesn't have to be a magnificent trend, but yeah, I do like a little bit more kind of healthy swings, and most of the time the major pairs give that quite a lot. The minor pairs have their moments, but a pair like Euro Pound doesn't provide that as often as some other FX pairs which I trade. So it's not a pair which I trade quite a lot, but I do keep tabs on it because a few times a year will give me a nice trade here and there. I don't think I've actually placed a trade this year on Euro Pound, so it's been a while. But it's a market which is quite bullish. It's pushing into some resistance now. We are losing some momentum. We're becoming quite corrective. So I would keep an eye on some shorts here for Euro Pound. We're seeing signs of the market slowing down. We've already hit a big level which provided a big sell. So we've got a couple of reasons why Euro Pound might sell off. If I was to drop to the low time frames, you can still see we're quite bullish here. So I wouldn't be looking to short just yet. Yeah, still a nice consolidation, nice push to the upside. Looks like we're respecting a support. So this is still very much a bullish market. But if we can see some evidence of some lower highs coming into play, maybe a break of structure here, then there could be some nice shorts on a pullback. And that could be something that could interest me, especially if there's a lot of momentum to it. If it's kind of like a slow move down, I'll probably just focus on another pair. But if it's like a meaningful push down with some strength, that could look good, especially with the confluence of where we're trading, coming back into some higher time frame resistance. So yeah, Euro Pound is a pair. I'll probably be waiting for the shorts. We've been bullish for quite a while. I think we're quite stretched right now, maybe a bit overextended. About to test the resistance level. We're seeing some signs of slowing down. Of course, we haven't shifted yet, but I would kind of wait to see if we can get some signs of that happening. Okay, we'll go through Aussie. A lot of people have requested Aussie. Quite popular. I'm not too sure why Aussie's quite popular. I'm not a big fan of the price action. It's quite a choppy pair. Okay, let's go take a look at Aussie. So yeah, Aussie dollar, not a fan favorite. Very corrective, very corrective. There is some uptrend at play here, but it's just so corrective and lacking momentum. We've had a couple of fake outs here, which I've been expecting price to give us a pretty meaningful move to the downside, but in both occasions it didn't happen. Both occasions provide a bit of a fake out. So you can see a little bit better on the daily chart. I think 4 hour is a bit too zoomed in. The daily chart kind of encompasses the price action pretty well in terms of how we're moving. But if we can get a strong close, so let's say the daily candle is to close like this, nice bullish engulfing candle. You got the wick to the downside from yesterday. Your price is essentially holding support there, still respecting the low of the trend line, low of the channel. I would fancy another push to the upside here, at least a push back into resistance, but more so a push back to the upper end of the channel. So Aussie dollar looks like it's got a bit of a case for a bullish move here, bullish swing. Now the question, how do we trade that? I would suggest if we're to push up, come back and retest the low of the trend line, there might be some buying opportunities there. I'm not sure about stop loss there. Would I have a stop loss here or a stop loss here? I think stop loss here would be a little bit better. Well, actually a lot better. But that might skew your risk rewards here. Tighter. Makes sense as well. You're below the trend line. Of course, risk reward would be a lot better, but probably higher chance of getting wicked out. Trend lines are not always as trustworthy to put stop losses above and below them. But in terms of the swing I'm expecting for Aussie dollar, I would have to be bullish for this pair and a push to resistance. I still think long term we might see some downside, but not quite there yet. I'm still quite a fan of maybe some shorts at the high of the channel, but we'll see once we get there. Anyway, I believe we have come to the end of my segment. I appreciate everyone for having me on the stream. I hope you have enjoyed it. I've had a a good time here on the stream. I'm pretty sure A1 and the team have dropped the link to my channel, so head over if you want to check out more of my content. But I think the next guest is about to start their segment. But yeah, thank you for having me on, and hopefully see you guys next week.
Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show.
Hello everyone, welcome to my segment of the stream. So I hope everyone is doing well. We're going to do the regular schedule. So at first I want to show you my trades, some of the trades I've closed this week, some of the trades I have opened recently, and some of the trades that I'm looking to get into. So that's going to be the first segment. But while I'm doing that, you can go to the chat and you can put in your chart requests. Chart requests, any questions, psychology questions, risk management, strategy. So I have the chat open on the side. If you have anything, put it there and I will get to it. So let's start with the first segment of the stream. And the first segment is I'm going to show you my positions. So this week I closed 2 trades. First one was on the New Zealand yen. Okay. Right here, this one has been open from the 22nd of May, and I got tagged out using a trailing stop loss on the daily chart. So this was like a 3.2R win. Then I got taken out of a NZD CAD position. So this position was very interesting to me personally. I took it on the 14th of July and got taken out on the 17th. The reason why this trade was very interesting was because of the edge finder. Okay, on the edge finder, the New Zealand dollar is very, very bullish right now, meaning the fundamental data that is coming out more bullish than the forecast, while the Canadian dollar, the data that is coming out for the Canadian dollar is coming out more bearish than the forecast. So New Zealand dollar very bullish, Canadian dollar very bearish. So you want to buy New Zealand CAD. But where do you want to buy it? Well, if you look at the daily chart, you can see a clear flat range right here. Okay, so you can see a flat range. And what my thinking was, if I buy the bottom of the range and aim for the highs, it could be a nice risk to reward. It could be a nice position. So if we can maybe go to settings, profit level, let's see, 100 ticks. So this was my stop loss, but I was aiming for like a 2.4 reward to risk. So I was aiming for the high of the range. Unfortunately, I got tagged out. Now the price is going to the upside. It is what it is. It's part of the game. Currently not looking for any new buy positions, but I think this trade was pretty nice and I was happy with it. Probabilities were, or the fundamentals were good. Technical analysis was good. Just the probabilities took me out of this trade. So those are the 2 trades I closed this week. Now I still have open a silver trade. So we're going to do some analysis on gold and silver. I actually have a position on silver and I also have a position on gold. Both of those are buy positions. Silver is doing much better than gold right now, but both are in some profits. So for silver, fundamentals at this point were pretty bullish. Okay, the silver is also currently bullish, I would say. not with the fundamentals, but because of the technical analysis. Also, the technical analysis was looking good, so I took a buy position when we broke out of this range right there. Took a buy position, currently running around 2.4 R. I'm looking to trail my stop loss, but the reason why I think silver is still a pretty good buy, so still pretty interesting to get in, maybe not here, but maybe if the price pulls back to this level of support, well, gold already had a massive explosion to the upside. So gold already had the massive uptrend, as we can see here, while silver hasn't moved as much. Okay, it hasn't moved as much. So if you, for example, look at the gold to silver ratio, XAG USD, and if we go to the, let's say, the weekly chart, you're going to see that gold sometimes outperforms silver, and then silver sometimes outperforms gold. So these are the extremes. These are the extremes of the range. But where would be kind of the middle of the range? I would say it's somewhere around here. And you can see gold recently outperformed silver, but then it started moving lower, meaning silver started catching up to gold. I think this chart could go a bit lower, which means silver could go up in value while gold could stagnate or maybe even lose some value. That's why I think silver is a more interesting position if you want to buy the metal market. I think silver is the more interesting position. Also, if you're looking at technical analysis, we broke out of this flat range right here. So we broke out with quite a lot of momentum, and then we retested this level a little bit, and now we have continued to the upside. So that is a signal of strength. That is a great sign that the markets could continue to the upside. Now, I mentioned gold. I do have a buy position running on gold. This one I didn't take on my personal account. So silver I took on my personal account, but gold I took only on my prop firm accounts and only on my Darwin X account. But basically, I didn't want to have too much exposure for the metals market. So yeah, on prop accounts I'm a bit more aggressive, and I thought this was an okay trade to take. My analysis for gold is we are in a definite uptrend right here. We're respecting this trend line on the daily chart, and I do believe technical analysis, or I do believe this trend will continue to the upside. As far as fundamentals go, or macroeconomic analysis, well, I would say for the macro, it all depends on what is going to happen in the future. Right now, we're risk on. Inflation is kind of not a problem, not at least a big problem. The US economy is doing pretty well, which is not the best thing fundamentally for gold to move up. And I think that's exactly what Trader Nick talked about yesterday on the stream, that gold could be a bit flat. It could be a bit range bound unless some sort of a catalyst happens, okay? Unless some sort of a breakout happens on gold. So hopefully we can break out of the highs. I do think we need, as I mentioned, some sort of maybe like a trade war escalation. Maybe Trump has a crazy tweet. Maybe there's some sort of a crisis, and then gold could go up in value. Right now, my forecast would be that we're a bit more range bound with the current market conditions. But overall, I do think we could continue with the uptrend. Okay, I do think this overall uptrend could continue eventually. So I have positioned for a long. I'm running a little bit of profit right here. It's mostly kind of around break even, to be honest. It's not a lot of profit. This is a small position. I didn't risk a lot on this position. And it could also be a nice hedge, as Trader Nick mentions as well, because I also have I had a couple of risk on positions. For example, hedge against the DAX long, hedge against the New Zealand yen long that I had, right? Against this trade. I do have a long-term investment into the S&P 500. I also have some crypto investments. So being long on gold could be a nice hedge if there is a crisis, trade war, some sort of a conflict escalation. So my risk on assets lose value, but this trade could go up in value. So I could make some percentage on this particular trade. I'm just gonna leave this one run for now. If it does go up, I'll look to trail my stop loss. So what I usually do is I look at the daily chart, and if the price continues up like this, then I would just keep moving my stop loss underneath these swing lows. So that is the general game plan. The next one I have in terms of trades, or the last trade I have that is currently running, is on the DAX. Okay, so the German stock market. I took an initial position right here. This was my initial position, got taken out for a loss. But after that, I still like the trade. I still like the technical analysis, still like the fundamentals. Let me check the comments. So euro dollar. Okay, we're going to do euro dollar. Do you trade Tesla? I personally don't trade Tesla, but Trader Nick does trade Tesla, I think, more long-term. I think he actually buys Tesla as a long-term investment. Bitcoin, sure, we're going to do Bitcoin. What is your take on the NASDAQ and the euro dollar? Okay, cool. So NASDAQ is the next one on the list, and then euro dollar, and then Bitcoin. So as I mentioned, I'm in a buy setup here. Didn't mind getting in on another buy position after getting stopped out. I think technical analysis is bullish. Fundamentals are bullish as well. We have a current risk on environment, which is good for the US stock market. It's good for the German stock market. As far as trade wars go, as far as Trump tariffs go, they are not really problematic right now. We know Trump makes a big threat, and then he kind of removes the threat. He kind of goes back on his word, and things don't end up being as bad as people thought. So people definitely started catching on to this. And now when Trump makes a new tweet about a specific tariff, usually there is not a huge reaction in the market. Usually the reaction from the markets is kind of minimal, I would say. So there is some potential tariff between United States and European Union, but there's also some talk of trade deals, which in the end is the most important thing. So as long as they are communicating, as long as they are talking about trade deals, you could see the stock markets go up in value. So that is why I'm personally expecting the DAX to continue going up, currently running a little bit of profit, and I'm just going to trail my position. So if this happens, let's say we continue on the daily chart, I'm just going to move my stop loss underneath the swing lows, and my original stop loss is still in place. I still have not reduced my risk. So yeah, my original stop loss is still at the 23,561 level. The next one is the NASDAQ. I'm closely watching the NASDAQ. I definitely want to take a buy position. I think this is looking very bullish. So technical analysis, Lee James says taco. Yes, so Trump always chickens out. That's the acronym. Lee James, markets are tariff fatigued. Yeah, they just kind of don't really care about tariffs anymore. I mean, not as they used to care. So it used to be that Trump put out a tweet and there was a huge reaction in the markets. There was a huge sell-off in the markets. But nowadays, Trump makes a tweet, the reaction is much, much smaller. Okay, much, much smaller. FX Bashy says, I'm fatigued. Yeah, it's a bit too much. I think most traders, most investors in this year of 2025 have been pretty tired of all of the back and forth with tariffs, no tariffs, breaking news here, breaking news there. Trump tweets this, Trump tweets that. So it gets very tiring, and I think markets have noticed it's not really that significant. Trump is probably gonna go back on his word, and he's probably gonna chicken out. So why not just ignore his tweets, ignore all of the tariff noise, and just go up? The US economy is doing well. If you look at the numbers, if you look at the fundamental data, the US economy is doing great. Inflation is not really a big problem. Inflation is, I would say, under control right now. Maybe a little bit elevated, but overall, I would say it is under control. And that is a great environment for the stock market to go to the upside. So I would look for a pullback right here. I would not be a buyer on the top. I think we are a bit overextended. I think possibly a pullback will happen. Now markets are not taking Trump seriously. Yeah, I would say that's the case. FX Bash, he says, I trade M1, Marco. So it's too volatile and inconsistent. Okay, that's a lot of work. I wouldn't touch the 1 minute, to be honest. That's crazy. But whatever works for you. Anyway, I wouldn't be a buyer on these highs. I would expect for the price, hopefully the price does pull back a little bit. Hopefully we get this, touch the support level, and then I can get in on a buy position on that support level. But yeah, the summary is I'm very bullish on the NASDAQ. Technical analysis, fundamental analysis, it all looks great. So I would be very interested to get in on a buy setup, but we're just a bit overextended, just a little bit overextended. It's okay, bro. Not everyone can do it. Yeah, congrats to you if you can. It's I think that's the hardest way to trade on the 1 minute or the 5 minute. Just very quick price action, very quick movement. Something happens, there's a crisis, Israel and Iran, and you get stopped out for much more than you initially risked. So that's very, very tough. Euro dollar. Actually, one more thing on the watch list I do have is the USD CAD. Before I do euro dollar, before I touch on Bitcoin, USD CAD, I'm looking for buy positions. Okay. The reason is Canadian dollar is very weak fundamentally, and I do think the dollar short term is bullish. Okay, I think short term dollar could be bullish. So we could see this potentially on the dollar. We could see some bullishness happen. So here for the dollar CAD, I would say if we break this level right there, let me see if I have an alert set. USD CAD. I do have an alert. Let's delete this. Let's put an alert here. So if we break this level with bullish price action with a lot of conviction, I think we can get a nice uptrend. Okay, I think we could definitely get a nice potential uptrend, and that would be great. So I do have this one on the watch list. I'm looking for buy setups, but I would first need to get a breakout of those highs. I would first need a breakout. No Nick today. I don't think so. I think Nick is away for today, so it's only Miko, me, and Chris Pulver, if I'm not mistaken. So 3 guests for today, but no Nick. We have taken over the channel. We're gonna call it, I don't know, Takeover Fridays. Okay, so every Friday it's gonna be Miko, me, and Chris Pulver. Just kidding. So I think Nick is just away for today. He's gonna be back next Friday. Anyway, USD CAD. Now you know what I'm looking for. It's on the watch list. Looks interesting. Edge Finder is very bullish on the dollar CAD. I think Nick is watching for buy setups here as well, so that's pretty good. Euro dollar. Let me check on the fundamentals for the euro dollar. Let me open up the Edge Finder quickly. I'm not going to put it on the screen. It's a bit too complicated to put it on the screen, but let me check it on my end. So neutral. Okay, so neutral, fundamentals, technicals, bullish, uptrend. Okay, looking pretty good, pretty strong. But one problem is that the dollar is currently very oversold. I would say the short trade on the dollar is very crowded. You know, everyone is selling the dollar. It's a very, very popular trade, very, very popular position, selling the dollar. So that's not a good sign. If everyone is short, especially if the retail traders are short on the dollar, that means it's probably going to go up, right? So, and that gives me a big warning sign. And that tells me maybe I don't want to get on the uptrend on the euro dollar. You know, that tells me maybe I want to be a bit patient here. Maybe this can go down a bit more. Like this in the short term. So for the euro dollar, I would say short term, I'm a bit bearish. I think we're going to get downside. Long term, I think we can actually go up. I think we are going to follow with this overall uptrend, right? So my forecast is a bit of bearish price action, but then we start to kick in with bullish movement, and in the end, we do continue higher, especially if rate cuts come. So that's a big if, but for now we have 2 rate cuts priced in for the Fed for 2025. Okay, and rate cuts. What rate cuts do is they actually lower the value of the underlying currency, meaning they lower the value of the dollar and they push the stock markets up. So if we do get the forecasted 2 rate cuts, you could see the dollar lose value and you could see euro dollar go up, pound dollar go up, Aussie dollar go up, stock market goes up, Bitcoin goes up, gold goes up. So you get my point. But for now, it's a bit uncertain. Okay, we had some news from the Fed, from Powell, from Waller, from Besant, I think, something like that. Anyway, there's a couple of people in the Fed, and all of them are conflicted. Some of them are more hawkish, some of them are more dovish. Some of them are afraid of inflation, some of them want to cut rates. Some of them want to suck up to Trump, some of them cannot stand Trump. So it's a bit of a gloomy picture. We're waiting for more clarity. We're waiting for the next Fed meeting, which is I think in 2 weeks. Okay, so in 2 weeks there's a Fed meeting. We're gonna get more info on rate cuts. So far, I would not be buying euro dollar. I would not be buying pound dollar. I would actually only be looking for US dollar CAD longs as far as the dollar pairs go. That's my forecast for right now. I know it looks good. I know technical analysis looks pretty good right now on euro dollar, but it's just not my cup of tea. I can see everyone on the internet is going short on the dollar. Every single influencer, you could say, every single basically every single big account is calling out for lower dollar. That's not a good sign. Usually markets do the exact opposite of what the crowd is thinking. Okay. I'm sure Nick was looking to short GU, wasn't he? I'm not sure about that. I would not be going short, me personally. Let me check on the fundamentals for GU. Let me look at that. Bearish, damn, -7 score. That's pretty good. I personally, at this point, would not be shorting GBP/USD. Maybe if we really melt lower, if we really start to melt lower, I would look for sell setups. As far as current price action goes, I would be more patient on the pound dollar. Because again, if rate cuts do come, and on the Fed watch tool, 2 rate cuts are still priced in for 2025. If rate cuts do come, pound dollar probably goes to the upside. Okay, it probably goes up. So yeah, I'm just being a bit patient. I'm being a bit careful. I'm not sure what Nick is doing exactly. I know he's not currently looking for buy setups on these free currency pairs. I definitely think he's not looking to buy them. So yeah, the selling of the dollar is a very crowded position, and that's not a good sign. You don't want to do the exact thing that the crowd is doing. You don't want to do the exact thing that the retail is doing. You want to do the opposite, right? So let me see. I'm suspicious about Trump wanting to fire JP. He mentioned he'll get fired if he does fraud. So seems like Trump's fishing for something. What's your opinion? Trump is not going to fire Powell. Okay. I think Trump and administration, they know firing Powell would have massive, massive repercussions to the markets. People would lose a lot of trust in the US, and it would disturb the markets greatly. Also, you need to know that the Fed is a voting system for rate cuts or rate hikes. There's a lot of people. It's not just Powell controlling the voting. There's a lot of people who come together, and then everyone has their opinion. Are they dovish, hawkish, or neutral? So you can't, if you do fire Powell, it's still not going to make a big difference because there's still a lot of people with their own opinions. You would have to fire everyone, and you would have to employ totally new people in the Fed who are all dovish for them to just cut interest rates like crazy. So firing Powell would not be that beneficial, and the downside to firing Powell is massive. People would lose a lot of trust into the United States, and there would be a big problem. Okay, and Trump knows that. He's not going to fire Powell. He's just being Trump. He wants the publicity. He wants the news to constantly talk about him, and he likes it. He thinks it's very fun. So yeah, if it works for him, then great. UK holding rates, okay. They can't fire Powell. I mean, they could fire Powell, maybe, I don't know, but they're not going to do it. They're not going to do it. It would just be very, very, very bad for the markets. It would be very, very bad for the US administration. Yeah, so it's multiple people. They get together and then they vote. Will we keep the rate the same? Will we have a rate cut? Will we have a rate hike? Okay. So it's like maybe 10, 12 people. I'm not sure. I'm going to have to research that. But even if you fire Powell, you're not going to accomplish anything. Okay. So Bitcoin was a request. Bitcoin looking nice, looking very bullish. I saw yesterday some breaking news that Trump is going to allow basically the 401k in the United States to invest into cryptocurrencies, so that I think retirement funds or pension funds, whatever the name is, they can actually invest into cryptocurrency now, which is bullish. That's definitely bullish for crypto. And you can see maybe someone knew something. We had an explosion on the 8th of July. Maybe something was up, something was expected that Trump is gonna pass this bill. And yeah, we had an explosion. Chart looks great. Technical analysis looks very bullish. Fundamentals, we are now in a risk-on environment. The NASDAQ is flying. Bitcoin can act as a technology stock. So if NASDAQ flies higher, Bitcoin could follow, or maybe even should follow. So looks great. I'm actually looking for buy setups if I get a pullback. So I would not be a buyer here on the top. But if we do pull back a little bit to, let's say, this level of support, I would be pretty interested to look for some buy setups. I think this area looks very, very attractive to place a small buy position. Okay, Ethereum, damn, Ethereum is crazy. What is happening with Ethereum? So Ethereum is flying. My colleague Griff actually bought one Ethereum here on the bottom, and now he has like a 144% return in a couple of months. So that's amazing. Congrats to him. I personally bought Ethereum as a long-term investment here on the 21st of November. But anyways, Ethereum is flying like crazy. I would personally not look for buy setups. Also, my time is up, so I'm going to wrap it up very soon. I would not look for buy setups on this one because I think it's very overextended. And personally, I would rather stick to Bitcoin. Bitcoin is a bit more familiar to me than Ethereum. And Bitcoin right now looks great, looks very bullish, is currently at the all-time highs. And yeah, looking at this level to buy because I first want to get a little bit of a pullback. I don't want to buy straight here on the top. So that is it for my segment. Thank you guys very much for watching. If you want to check out my channel on YouTube, it is Marco's Trading Journey. See you guys next week on Thursday. I will be streaming with Nick. And yeah, good luck in the markets.
Hey stream viewers, if you're outside of the United States, I have a cool offer I want to tell you guys about thanks to our partnered broker, 8cap. 8cap is currently offering the ability for new depositors to get access to our premium tool, the Edge Finder, completely for free. Now how this works is basically you create an account and deposit a certain amount of money into that account, and they will essentially buy the Edge Finder on your behalf. So it's a win-win-win. They get a new client for a reputable brokerage, you get access to the Edge Finder and a great brokerage to trade with, and you'll be supporting the show by signing up with 8cap. Now here are the steps if you want to find out more about this specific offer, but make sure to follow them specifically as we list them out on the screen here. Step 1, navigate to a1trading.com/8cap. That's a1trading.com/8cap. Step 2 is to follow the instructions and to make sure you use the specific link on that screen to sign up for your new 8cap account. Step 3, complete the required deposit amounts and contact their team as instructed on the page. So if you're interested in finding out more about this offer, head over to a1trading.com/8cap, and we'll also be dropping the link to this down below in the live stream chat as we speak. Like I said, make sure to follow those instructions specifically if you'd like to get access to a free copy of the Edge Finder if you meet the deposit requirements as listed on the website. Full information, like I said, can be found a1trading.com/8cap. Now back to the stream. If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, extra clips and bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream. If you're someone watching the show right now and you're outside of the US looking for a better brokerage, listen up. I wanted to take a moment to mention today's live stream supporter, Vantage. Vantage allows traders outside of the United States to trade CFDs. You can trade everything from commodities like gold, you can trade US indices or global indices, and you can even trade FX all under one brokerage, and you can connect to MetaTrader 4 and trade directly on TradingView.com. Not to mention, they also have a really good sign up bonus going on right now. So we'll drop the link to that down below in the chat as well as in the description of this live stream. Check out Vantage. Now back to the show. If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Owanda. Owanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Owanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat. You can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. Good morning, everybody. Happy Friday. Welcome back. A couple of levels to watch for the day. Markets are back to where they started. So we had a slight gap higher, about 0.2%. We're kind of hanging out around this big 6,300 level today. Watching a couple of things here. Let me go to some gamma exposure. We've got a big level here at 6,310, which should actually put in a bit of a ceiling today. We might have a difficult time getting above the highs. So that seems like 6,310 to 6,320 should be a good resistance zone for today's trading. Let's go to today's expirations. Let's go all 18. There we go. So market maker, I mean, there's just a lot of cluster stuff here between like 6,300 and 6,250. This one's kind of interesting though. That's a good 0 DT level. Negative gamma exposure at 6,310. You know, we already hit that level. So if we hit 6,310, 20, maybe some melt ups, but that should also provide some resistance, which it already kind of has. I mean, the market has slid a little bit. We were up to 6,314 today. We're down to 6,300. Doesn't seem like a lot. You know, it's only about a 15-point move. I put in a trade for Tuesday with a little bit of a dead zone, which means I want price to stay out of this by Monday, Tuesday's expiration. Just some thoughts on where we're at with this current cycle. Today's a big monthly expiration. Going into next week, we have more earnings. I want to take a quick peek at earnings whispers. Earnings whispers calendar. And then see. All right, what's the date here? Monday the 21st. All right, so Monday, let's look at some notables. Verizon, Domino's, Cleveland Cliffs. Then we get into quite a few here. Just looking at some big ones. I don't know if Mag 7 is. I think Mag 7 starts to sprinkle in next week or the week, the final week. In fact, if it's the final week, that's going to be a crazy week. That is the Mag 7 through it'd be the week of July 28th through August 1st. If we have Mag 7 earnings that week, which most likely we do, it's probably Wednesday and Thursday is when most of Mag 7 kicks. It's like Tuesday, Wednesday, Thursday. We also have FOMC on Wednesday afternoon. Nick's going to be hosting a trading battle, and I'll be one of the participants. That'll be a lot of fun, a crazy session. August 1st is also the tariff deadline. Part of me wonders if this market can still cling to these highs if we are either turning like now with this monthly cycle, or two, we're ready to turn at the end of the month. Bullish, bullish July. It's usually a bullish July. Usually the market melts up bullish for the summer, and then like August, September, the market usually takes a little breather. It happened during COVID. It's happened pretty much, every summer, at least some type of mild pullback through August, September. Sometimes it could be a bit more violent, like we saw last year. But yeah, so far we are fading for the day. So let's see where price ends up going. I do have a potential bottom at 6,250. That is tentative because obviously when price starts to fall, and if it's falling somewhat aggressively, the VIX goes up, which would push this price down. So I don't love calling bottoms necessarily for the day, but the VIX is spiking up just a tiny bit, like literally from 16.3 to 16.44. Doesn't really change my percentage unless we have like a spike up to like 17. I mean, if you look at the VIX from earlier this week when we had the rumor mill saying that Trump was going to fire Powell, the VIX went from 16 all the way to 19. That's a big spike up, like 15% for the day, and then it faded all the way back down. So it's a lot of volatility in the day. The market sold off like almost 1% and then rallied back up 1% in the same day. So Unless the VIX makes a big spike, I wouldn't see that translated into, like kind of bottom picking for the day. So anyway, we'll see. But if we're just reaching the highs, the market can kind of celebrate that milestone, and yet it may sell off and actually finish red on the day, which to me is totally understandable. I can't believe this market is willing to just keep this melt up alive and well when the reality is we should have a pullback. I mean, technically we should have a pullback. This market is actually being very stupid to not have some type of 3, 5, 7% correction. So hopefully we get it. And I think we will. It's just a matter of the hardest part is when. So I mean, if we go from like 6,300 down to 6,000, don't be surprised. It's not going to get there in a fun way. It's going to get there like with drama, and it's Trump this and it's tariff this and it's blah. Who knows how it gets there? But the point is, I think it gets there. And this week's video that I posted was watch the key levels at 63, 6,200. 6,300 has been resistance. We just poked and poked and poked, and we got to the highs. So we're at 63.15 today. Big deal. That's still resistance. There's obviously some fluctuation. Like it can hit 10, 15, 20, 30 points above resistance and then fade, which is what I think we're experiencing today. Okay, so intraday price action. Yeah, we hit 63.15 today, but we're fading off that. That's called resistance. It's not perfect. It's not exactly at 63. That's also the beauty of trading options. If you were to sell a 6,300 or 6,305 call today and put in a bear call spread, you're getting paid on that right now. So the resistance is holding. If you sold here at 63, you got paid. If you're selling here at 6,300, you're getting paid. That's not a bad thing. So anyway, we'll see what happens. But I think the market has to have a pullback from now until like September. I just don't know what the news alignment's going to be, what the headlines will read to make it all happen, or to at least drive and fuel the move. But I just think technically it's overdue. Pulling back to this 50-day moving average is at 60.50. That pulls back to that ceasefire gap. That's the minimum to me. So minimum pullback here, possibly a flush down back into support. I still think there's a lot of support. I think it could make the market pretty nervous if we settled in at like 58 to 5,700. But right now it's still just waiting to see, like, if it can't break the floor. That's kind of what's going on. We have a little resistance here, and it's just kind of danced around these tops. But if we break that 6,200 floor, it doesn't take much to push this thing down a few hundred points. So if we break 6,200, I am actively looking to do bear call spreads until we at least hit 6,000 or lower. Okay. So hopefully that works out pretty well. I have a trade right here out to August and September that if we do have a correction, then these trades look pretty good. I have a I think it's a 260. No, 230. A 230 credit and a $1.60 credit. So total's 390. And that's with also a profit trap of $500. So those trades are still running out to August and September. I think we do get a pullback and a correction. And the market doesn't, hopefully the market doesn't just resiliently snap right back up to the highs again. But based on this, if this 390 is trading for $1.40, maybe under $1, I'll probably just take the profit. Okay. Had some pretty good wins this week. Ended up closing Palantir for 96.7% of max credit. Ended up taking some new trades on Apple this week, on Zoom this week. Did some rolls this week on NVIDIA, closed out a naked put on that one. Rolled TLT, rolled Tesla, rolled MicroStrategy, rolled SPY. Let me double check my expirations, make sure I'm not missing anything. I had a butterfly spread that I closed out this morning for 130% winner. That was pretty good. Let me just double check that I don't have any expirations out right now. So SPX. So this one is for profit. That'll be full profit. That'll be full profit. That'll be full profit, full profit. So I've got what? How many trades? 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 winners on SPX. This one's out to Tuesday, end of the month. This one's looking good. It's up 90% of max credit right now. These trades are August and September. So a lot of trades there in SPX. Okay, fine. I should have a lot of profit, which is nice. Next up, Tesla. I've got some puts that are expiring. It's a $100 put. Oh, big deal. I still know my break evens. That's the important thing. I still have the 260s So the 280 calls, 260 calls, I'll continue to roll those. Tesla's trading at 327. I've got some about 45% of the bull put spreads. Earnings on Tesla coming up soon as well. Qs. This one's going to be a loss today. That's annoying. Let me see. What's my max risk here? Max risk would be $1. What the hell, man? Well, I'm clearly not going to close that. Okay, so this is going to be a max risk of 40 cents at, so $200. This is actually exceeding what I'm gonna lose. This trade will be a loss of $200, not 340. So that's actually showing more, which is annoying. Okay, but what else? I think that's it. Then we have profit there. This one's out to the end of August. Bull call spread, hedging, fine. SPY trades, I closed out SPY trades. This one's going to be a loss of about $16. The other one was a winner for about $50. July, hedges, naked puts. Still have a lot of profit potential. I mean, I sold these in like April for $6. I mean, there's still a lot of time decay. It's a 475, which is below April lows. MicroStrategy hanging in there. No pressing expirations. Collar trade. The put side of the collar trade will be expiring, which is fine. I'm way in the money on these trades. So the 310s, 390s, and 310s, those are covered calls. I'm just going to keep rolling those, getting the income on MicroStrategy. Lift. I do need to add this for next week. I need to add that lift. Maybe I can do that today during session. Is actually these are all in profit, so I can close each one of these down, or I can just roll it, which they're essentially trading for full profit, right? You see 100% P&L. So if I just roll these out and down, my break even's like $14. We're trading at 14.47. So if I wanted to get more aggressive, I can just sell a $15 call and just exit the trade for a small win. My break even actually is lower than that. My break even is like $12 because I bought the shares at 11, added a collar trade, added a put for protection as well. So I guess I could just let it run. I mean, I'm up $4,300. I don't want to choke the upside off too badly, but lift is not looking super encouraging for a run higher. Right, like this is the big pop in earnings. I thought we'd have more of like follow through on robotaxi stuff, but it's not been there. Uber's been fading off the highs recently. Lyft is kind of coming back as well. So maybe it's just more of an accumulation phase, which shouldn't really bother me. It's like this move. Let's say we're making higher lows, we pull back into this gap level, and then go from there. I think I should just kind of chillax on this. I think we can get to $18, $19, $20. Then I'll sell a call because I just own the shares. I don't really have to worry about the timing of it. I didn't do a diagonal spread. This is just own shares. So I have all these shares, but I do want to lower my cost basis. So I'll put that on the to-do for Monday. American Airlines, this is going to be for full profit, up about $750. That's a winner for the day. Yep. NVIDIA did some rolls. The put side of the collar trade is going to be a loser. That's fine. I'll just watch the call side since we're trading at 172. Or it calls at the 130 that I'm rolling. Broadcom, I'm taking a loss here. That's fine. This should be 250 max. What's it trading for right now? 245. See if I can save myself a couple cents here. $245. Can I save 5 cents? Survey says no. Cancel. All right, it's gonna be a full loss of 250. So I'm losing $1.20 on that one. No big deal. Annoying. This trade, this one didn't go anywhere. I'm gonna close this one down for a small loss. 22 cents credit. See if this will fill. See if I get 25 cents. $25 not filling. Come on. So rather than losing the full debit, I'm going to take a little bit of a smaller loss. Come on, give me 20 cents. This thing doesn't seem to be very liquid today. All right, let's go 15 below the mid price. There, 15 cents. So NWSA. Is here. 56, closing out for a 15-cent credit. Taking the loss. Oops. Equals 56 minus 15. What's the loss there? 41. So 15 minus 56. There. So loss, but partial. All right. So closing out this trade. Okay. Updating the trade here. At end of day. Okay, and then I have one more trade in, little DJT that is also showing a bit of a loss today. It's down 96. It's actually down full. Yeah, it's down full right now. This stock didn't move at all. That's annoying. So, all right, I'll take a loss there. That'll be fine. All right, let's keep going. Currency strength overnight. New Zealand on top, Aussie on top, dollar weaker. Dollar's been pretty steady to the upside the last couple weeks, and looks like the dollar turned kind of right at 6 p.m. last night. Dollar stayed weak all day, as well as the Japanese yen. New Zealand making a nice little comeback. Let's take a look at some currencies. Still holding my position long Aussie CAD. Aussie Swiss, I'm still holding long. Aussie yen, we had like a one-day sell-off, and that was it. Aussie New Zealand, I'm still holding long Aussie New Zealand back to the 1150, possibly 1400 highs. I'm still just going to dollar cost average into this thing long. Aussie dollar. I'm shaking my head here. Like, this Aussie dollar is in an incredibly like textbook pattern, and it's almost frustrating because it's so weird. It's almost like all this stuff is like heavily manipulated right now in the markets. So I mean, I wouldn't be opposed to buying dips on Aussie dollar, but I can't keep buying like higher lows, higher lows. I don't like that trade. So I'm hoping we have some type of pullback into like 6,300 or 6,200 to offer that as a better setup. CAD Swiss, I'd like to think the CAD Swiss can make its way back up from divergent lows, oversold conditions, to historical lows, to maybe just not going down for a second and getting back into this cluster at like 62 to 6,300. It's not there yet. Still waiting. CAD Yen, no trade. Best trade was off that 101.70 level. Swiss Yen still hasn't made a real turn. It's at historical highs. A price pattern would be great. A break of this trend line would be great. Just hasn't happened yet. Euro Aussie, stay out of this one for now. Euro CAD, stay out of this one. Euro Swiss, strong support at 92. Waiting to see if we get back to like 96, 97. Euro Pound, possibly just a new range trade. high, low, maybe a range trade on euro pound for a while, which is pretty volatile. I mean, that'd be a 250 point range for the euro pound. That's a lot of movement. Usually you don't see this currency pair that volatile. Euro yen, no sign of slowing yet, coming into some pretty heavy resistance between 173 and 175. Just be mindful of that. Plus, we're registering overbought conditions. Euro New Zealand, no trade. Euro dollar. This is not the pullback that I was talking about. So, like, I expected the dollar to catch a bit of a bid. If this is high, low, lower high, lower low, okay, maybe that's all it gives us, like a 114 ish. I think the dollar could possibly pull back into like the 112, 113 zone. So either this, pulls back again for the same top and then sells off. You break the low and you measure that move down. That'd be kind of a symmetrical breakout. Or we have a high, low, lower, low. Or this is the trickiest one. We have a push back up to highs again, only to see it come right back down. But it's like I'm looking for at least a bit of a near-term high or top on euro dollar, also holding the lows on DXY. Okay, pound Aussie. I'm going to say no trade on that one unless you're buying this support around 204, 204.50. Pound CAD, if you sold the 8,800 zone, that was a pretty good resistance right here, equal highs. So little test of those levels, but good price action respecting that resistance all the way down for about 500 pips. Pound Swiss, if you're willing to dollar cost average into this one low enough, not a bad spot to enter. Area 1, Area 2, I'd say target 1 would be right here for profit, or anything higher into this pocket for profit would not be a bad spot. But you got to be willing to, I'd say buy small. If you have margin on this one, this is typically, at least for a US trader, like 2 to 3 times the margin of other currency pairs. So I tend to trade this one a bit smaller for that margin. Pound yen, I don't know. I would say just watch this, see if it breaks. Watch that trend line there. If it stays on the left-hand side of the trend line, still in a buy zone. If it breaks and rolls over, then maybe we have a sell. Pound New Zealand, totally choppy right now. I'll box this thing in. So support and resistance. That's kind of it. Pound dollar, maybe a swing trade. We did tap these lows. If we pull back into, let's say, 35, 3,600, good looking sell trade for the stop above and see if this is a swing down. We've gone up from 2,100 all the way to 37, 3,800. I mean, that's a 1,600 pip move. And other than that pullback, that's all we've seen. So I could see the market at least finding from a Fibonacci standpoint something like this, fully pulling back to like a 38% or 50%. So if I'm looking at profits here, high, low, lower, high, lower, low, find the 38%, find the 50%. It's a pretty good looking swing trade as far as reward to risk goes. Not bad. New Zealand CAD, I'm still long. I'm still not getting the pullback, man. I want to get a pullback here towards the 50% zone. 80, 78, 80, 80. I'm not getting the fill. So I'm still long. I'm holding long in here. I bought these lows a while back. I'm just waiting for like a push into symmetry of some sort. And maybe this is not going to be my symmetry, right? So maybe this is my symmetry. Maybe this is my symmetry there. So we pull back to the 382. Okay. I mean, I think maybe we get up to 84.50, maybe 8,600, test this previous high. I just thought this market could pull back to like a 50618 in kind of the efficiency that this pair is good for. I'm still long though. I'm still long at these lows. It's just about break even, but I'll still hang on to it. New Zealand Swiss, I'm still long. We've got a decent bar count on this one. Plus, I'd say pretty strong support here if it holds. So maybe this is a swing, deep pullback, swing to symmetry, deep pullback, swing. I'm looking for a 3 or 5 wave move. There's a lot of support back in here. So 5,300, 5,350 is a good profit target for me on this one. New Zealand yen, still melting up higher. That's fine. New Zealand dollar, a little bit choppier, but still kind of open space. If you're willing to, buy small and maybe have a second position in here, stop loss below, I think this New Zealand dollar still gets to like 63.50. I mean, it still gets there. The problem is right now, it's like every bank has cut rates except for the dollar. The Fed is not cut. They're the last one to cut. They're like the last one to raise, the last one to cut. It's funny how that works in the central bank system. It's like Fed sets the tone. A lot of other central banks jump the gun or just do it ahead of the Fed. Fed gets a lot of free mileage out of talking through rate decisions and what they're going to do transparently to the market. And so, I mean, if you bought New Zealand dollar right now, it's actually a negative swap just for, well, I mean, for a while until the Fed starts cutting. Dollar CAD, just be mindful. This is a very messy zone. There's a lot of resistance here around 38.50. To me, if we get back above the 39 to 1.40, then maybe this is a run back up to the highs. Otherwise, this is probably a messy zone. I'd rather be buying the dollar CAD down here around 34 or 3,300 if possible. So I don't think I'm going to take a trade in the middle. I'm still waiting for a kind of a better zone. Dollar Swiss, I'd love to see a price pattern at these lows. Do we get a price pattern to work its way back up here? You know, swing and take out a high, pull back, push into symmetry. That would be a good enough spot for me. I'm not trying to hold it all the way to 92. I think I'd be very happy at like 87 or 88. My break even is around 85. Actually lower now because I have, you know, this low is added in. So this probably lowered my cost basis by 30, 40 pips. But ideally, this pocket is what I'm after. If we can go after that, like 80, was 8,800, 87.50 to 8,800 would be a good pocket fill. The dollar yen, a little hesitation at the 149, 150 handle. I had mentioned this as a channel, like so, right? So it might hold up here. A lot of support become resistance. If it gets up into, let's say 150, 151, that's okay. But take your short-term alignments and see if it stays inside this channel. Okay, I don't know what it's going to do. I just know that if we break 140 in the bigger picture, if we break 140, this thing's dropping to 120. So at some point, this could be a very exciting trade. But don't get too excited, because what's going to happen if we go from, let's say we go from like 158 or 160 all the way down to 120. That's going to be a terrible environment for the dollar, a terrible environment for risk appetite. If the Japanese yen is going to get that strong and that sustainably strong, we're going to have a crap ton of volatility that's going to make traders lose their minds. So as good of a setup as it is, it's almost like, based on the Bank of Japan's you know, safe haven status, you really don't want to see the Japanese yen get that strong. Because if it is, that typically has repercussions, like, i.e., look at last summer, July to August, right? The big sell-off in the Nikkei, the big sell-off in the futures market, the big sell-off in the U.S. markets down 10% in 2 weeks. That was a lot of that due to Japanese yen and safe haven flows, plus their, you know, deleveraging of the official cash rates. So, you know, they made it so it's difficult now. You can't really borrow at negative interest rates anymore to just arbitrage it anywhere else. Now their interest rate is 0.5. They're the only central bank that's been raising rates over the last couple of years. Okay, so anyway, it's just a big trade. Put it on the radar. The way I'm going to trade that is going to be Japanese yen futures. So 6J is how I would express Japanese yen, and FXY is how I'm holding shares that express the same thing. So if we come back here on 6J, I'll probably go out like 6 to 9 months and just place a bull call spread. There's no negative swap. It's just a futures contract. It would cost me maybe a couple of bucks to take the trade, and you know, make hopefully 500 to 1,000 bucks on it. And that's the trade. Okay, what else do we have? Let's go dollar index. Dollar index broke a trend line. Came back to the 50-day moving average. That's what it's hitting so far. A little in between the 50 and the 21-day. So right in here. If the market sells off a little bit in between the 50 and the 21-day, I think we can go a little bit higher towards the 100. I still think we can get up to a round number like 100 or 101 or 102 before the dollar looks to get faded harder. So I'm not selling the dollar yet. I think the dollar still has room to relief, like a relief rally and a little bit of a squeeze. It was a pretty crowded trade, but we've hit some symmetry and we had like one of the worst starts in 50 years. Oil, hanging in there. I think 65 is a good level of support. Natural gas up to 1593. I've got a 1650 call. Gold, chop suey. I mean, gold's honestly like pretty boring for now. I mean, it could be a little bit more exciting, but if gold maybe breaks again, there's really strong support here at like 3,100, 3,000 round number level. I've been talking about this for months, but I'm not really interested in buying gold at these levels. I'm interested in positioning for either I want to own gold down here or I'm going to wait to establish more long positions if we hit like the 144 to 200 moving average. So I want to see gold get into this area first before I start adding more exposure. I'm still long. I'm still holding long. Still profiting from long, but I don't think we go too much higher without having a pullback first, or at least going sideways enough that we end up catching up with this 144 and 200 moving average. Silver, I think silver is if I'm playing precious metals, I know silver's not a precious metal, but it's a more industrial metal. If I'm playing anything that looks bullish, silver is a good trade. To me, silver making a run to 40 plus has room to go up to 48. It still has one of the better technical setups I can find. And even if this is a channel, okay, I get there's resistance and support, and we might have higher highs and higher lows. But if I stayed consistent and committed to silver, I think we can get to $48. So without adding a ridiculous amount of exposure, I'm going to continue to hold my positions. If we get dips and pullbacks, I'll add more exposure on some silver futures and just continue to kind of fight this thing out. But any dips, probably SLV credit spreads or even a silver future debit spreads. Because with SLV, I can own more shares. With SI, I want to be right directionally, so I'd probably do debit spreads. Bitcoin, hanging in there, hit 123 and change. Now it's pulled back to 118. Could possibly be pretty well supported around like the 112, the 110 handle. Anything below, I'd say like 100 would be a little bit more caution. If we get back below 100, I'd say, pump the brakes on Bitcoin exposure, or pump the brakes on Bitcoin excitement, because we might have a bigger pullback coming. But if we just rally higher, which we did here, and then we have another breakout point, like maybe this just either goes sideways for a bull flag and goes higher, or this pulls back slightly, retests recent highs, and then goes up again. I'm still measuring moves out to 130. If we get a little bit more of a capitulation move, we can probably hit like a 150 handle this year, which obviously would be pretty exciting. I mean, I've established positions pretty routinely in Bitcoin, and that's one of my better positions right now for the year. MicroStrategy pulling back a little bit. I'm still flipping for income with covered calls that are way in the money. Coinbase, you've got to be shitting me, man. All right. Well, this is out to literally next week. Let me see what this one's doing. I've got a call condor in this one. I can't believe this thing is ripping the way that it is. I mean, Bitcoin's not going anywhere. What the hell is going on with Coinbase? Earnings are not until July 31st. My expiration is the 25th. Is this more stablecoin crap? Congress approved legislation establishing federal rules of stablecoins. Oh, geez. All right. Well, 444. Let me check here. 455 is my threat. So right now it shows that I'm down 105. This expires next Friday. I actually have a profit trap at the 445 by 450. So it's a 5-wide debit spread by a 15-wide credit spread. This should pay me 60 cents. The nice thing is if we stay where we are right now and we just drift higher, if we just drift a little bit higher, I could potentially have a profit trap where this thing pays more than 100%. So my fingers crossed for next week that this one doesn't just continue to rip. It's like maybe the news got priced in today, and this either fades or just drifts up slow enough that I can maybe get that extra $10 to $15 move, and that would give me a $500 profit trap on top of the 60 cents. So we'll see. Hopefully this is a good trade. But I was thinking it's going to be like this, like slow grind, but it's like, nope, it freaking jumped up here to 444. So a little time to care over the weekend will certainly help. This could bring that profit trap into play next week. So keep an eye on that one for pulver alerts. If Trump, he can't. That's the thing. He can't. Trump has no power or authority to do what he says he can do, which is fire Powell. He can't. And remember, Powell was appointed under Trump. So he was his Fed guy back in 2016. It's like, it's just so stupid. Like, honestly, I'm like, I wish I could just tune the whole thing out. You can't. It's impossible. Trump, good luck tuning him out. You can't. But it's almost like this week with the sell-off that we saw with this rumor right here. It's almost like you remember Liberation Day? Remember like April, whatever it was, April 9th? Good time to buy. It's like they tested the market, and it's like that little rumor of like a White House official and GOP lawmakers, blah, blah, blah. It's like it hits the headlines as a rumor. The market reacts terribly to it. And what does Trump do? He pivots and denies it. It's like we're just in this weird politicized news machine that's like making the market really sensitive. So anyway, he has no authority to do anything. The Fed should be completely independent, even if Powell like sticks out his term, which I hope he does, for the sake of just, I don't know, just one person having like common sense. Do your job. Inflation, employment, price stability, that's the mandate of the Fed. That's his, American duty, I suppose. Do it, as opposed to whatever noise we have from Trump and company. So it's just wild. So all right. Coin, I'm going to watch that one there. Let me set a chart alarm at 4:55. This would be my call condor profit trap. So see if that gets there. I'm hoping that this kind of just fades, but going into next week, that profit trap could be pretty good. Let me see if I still have that image. Let me go pulver alerts here. So stock options, Palantir, close that out for a winner. Here's Zoom. That was a new trade. Apple, that's a new trade. Coinbase, here you go. So this is what I posted in pulver alerts right here. So the 445 by 450 by 455 by 470, it looks like this. So live price is trading around 440. So I'm still right here in the trade. Okay, I'm still right here in the trade. So I have a little bit of wiggle room to go up another Qs. That was a waterfall closing for profit. Okay. I have another like $21. We're trading at 434 right now. I guess are we at 434? 436. So 436. All right. So I have nearly $20. So we're at 436 right here. Okay. So I still have, the profit trap starts at 450. So we can run up another $14. Then I have a profit trap that's worth $5. So if we just keep going a little bit higher in price, that gets me into my profit trap. That will take effect hopefully next week. This is maxed out on Friday. That's the expiration. And we'll see where it is. But hopefully this holds. And I'd love to get a bonus trap. That was the whole point of the trade, was taking advantage of the call skew and going out of the money to like the normal options chain. And hopefully that's, I don't know, hopefully it's good. We'll find out. All right, get this out of the way. Ethereum, another daily high in Ethereum, no complaints. I'm long ETHA, gapped up again. This has been working out pretty well. ETHA is now up around $9,700. I just bought the shares. I bought the shares like not that long ago, literally maybe 2 weeks ago. Up 10 grand in 2 weeks. That's not too bad. Do I want to take profit on this one? Not yet. I'm looking at profit up here towards the 30 handle on ETHA. If I was buying EETH, I'd be looking at highs at 81 to 85. If I'm on Ethereum, the spot price here is around $4,060. So if the spot price hits 4050, 4060, I'm going to start taking profit on my ETHA. That's my trade. Like, I know that this could be a trade that runs aggressively to the highs and then maybe pulls back again. We have a low, we have this neckline, maybe it's an accumulation phase, and then we break and go higher. So if there's going to be a trade out of this thing, there might be a chance to reload this position. If I miss it, then it's like, well, we run up here and we just keep running, I guess. But I think once we get here, it's like trail some stop losses, take some profit. If it pulls back, I can get in again, try to get the highs and break higher. So really, this is just something that sets up for a potential swing trade. Swing, pullback, consolidation, and then maybe more. If there's another chance to accumulate in here, that'd be a good spot to buy. But I'm taking this run. I mean, we bought it basically right here, and I'm going to try to take profit at these highs. So it's a pretty good run. And that was around a 50% take profit. So right now I'm up around right here, 37.5. So I'm close. I mean, if I get into 50 plus, I'm taking some profit to protect. That should be 12 or 13K. Not bad. Not bad in a few weeks if that's how fast it moves. Copper, anything here? Not really. I would consider maybe fading the copper move. Bid ask is really wide after that distorted move when we announced a 50% tariff. But if copper just kind of chops around in here, if it comes up to the highs, I wouldn't mind looking at a top to sell some copper. But it'd be risk defined. I don't know. I honestly, like, maybe that's a terrible trade, to be honest. Look at this thing. Like, once we had that 50% announcement, this thing hasn't done anything since, like, literally the day after. So 50% tariff announced and then completely sideways. I should have looked at like something directionally neutral and just try to take advantage. Like an iron butterfly would have been perfect for that. But anyway, I didn't. I just thought it was a crazy move. What else? The DAX just off of all-time highs. I'd like to see some oscillation here, maybe pulling back to equal lows at 23,100, 23,000. Fez, I'm still long puts and shares. FTSE creeping up towards highs again. Argentina, I'm going to stay out of that one. China making a nice little run to all-time, or not all-time highs, but back to highs. So China's getting some love here on Hang Seng. Brazil still hanging above the 200. Latin America above the 200. Mags, some fresh highs on Mags today, but is starting to fade. I think this is, Mag 7 earnings. We'll see how things are, like how good is growth. What is the overall trend? I still like Mags, buying dips. I still like Mags selling puts, collecting a lot of premium. I mean, the premiums aren't terrible. Apple at 210. I think Apple's pretty well supported at the 200 handle. I put in a ratio spread this week at the 170 by 165. I talked yesterday in the afternoon session, just selling like, either a naked put or doing a like a buy right, where you buy the shares, write a covered call against it, try to get some income out of it. This one isn't really a high flyer, So, I mean, I think Apple could maybe drop towards like 200, but 200 to 210 kind of stuck right now. If Apple gets above this, though, pay attention to this. If Apple gets above the 200 moving average, I think Apple also has the ability to play catch up. Low to high, pull back here, push higher, maybe gunning to all-time highs. Remember, Apple as a Mag 7 is a potential catch-up trade, right? Meta's at all-time highs, Microsoft at all-time highs, AVGO at all-time highs, NVIDIA at all-time highs. All those big top 10 stocks have hit all-time highs. Apple's still sluggish. Tesla's still sluggish. Google's still sluggish. Amazon's not at all-time highs. Like, if we get to those levels, that could be some good destinations for this year. So I think if you, I don't know, I like 200. I really do. I think if you're owning shares at 200, willing to sell calls and lower the cost basis, Apple still has potential to get up towards 250 again this year. All they need to do is start talking about AI, and it'll probably rip. Amazon just kind of slowly grinding its way up towards 240. Broadcom, of course, today's the day it pulls back. I need it to fall about 15 points, which it may or may not. I don't think that's going to happen, but we'll find out. Google, ratio spreads at 135, ratio spreads at 105. This should be looking pretty good for some profit. Meta, falling off the all-time highs. I'm just waiting. It's also expensive, where I'm not doing much on this one unless we have just really good discounts. Microsoft, I'm still long on Microsoft. Netflix, we had earnings. Earnings was a beat on top and bottom, but the price is faded. I didn't get the sell trade that I wanted. I was trying to fade this thing at the expected move at 1400. Didn't get filled. No big deal. NVIDIA, 171. I'm just rolling calls. That's it. Tesla, I'm rolling calls. Berkshire, if we get above the 200 moving average here, if we get back above the 200 moving average, Berkshire looks pretty good. Stop loss below. Low risk, high reward. Bonds, maybe catching a little bit of a bid. That's it. I do wonder what the bond market does post August 1st as well. Like this tariff deadline stuff. Does the bond market have some safe haven bids? Is this what's going to help the market if we have a like a bit of a risk off tone for a 5% correction? Does it help the bonds catch a bid? Does it help the dollar catch a bid? To be determined. But I think once we have this like tariff stuff out there, and the market has to kind of soak it all in for whatever it is, 10% global tariffs, 20, 30%, 50% random stuff, whatever Trump wants to do, at least it's out there for the market to hopefully digest and kind of price in. But I don't know. I think as long as we keep confusing everybody, it's like the bond market's going to be kind of a mess. 10-year yields still sticky. We're still way above what Liberation Day levels. Average mortgage just went up 6.7 to 6.75. Anything on like market liquidity? That's still pretty stable. This is what happened during Liberation Day. So just a big blowout in credit spreads. It's back to pretty tight right now. Alibaba gapping higher. That's encouraging. Baidu, a lot of volatility, but still off the lows, which is kind of nice. So I still have some shares of Alibaba and Baidu. FXI trying to get, ooh, maybe I'm going to take some profit here. Check some FXI. Maybe I'll take some profit. Up about 870 bucks on this one. I don't really want to hang on to this one too much longer. Large cap trying to, it's like, well, if we have a double bottom, that is my measured move. I'm going to stick with this trade. So we have resistance. If we break this high, and we are going from double bottom to measured move, I suppose I can hang on to this a little bit longer towards like $45 or $46. So I was tempted to take some profit here, but I think I can make a bit more. So I'll try to make a bit more money. All right, that's FXI. K-Web. I don't think I have K-Web in here. I do not. I took profit on this second test. We had this big rip on K-Web, big pullback. Once we retested, I took profit around the $37, $38 level. JD is up to, oh, what's up, JD? Making a nice little move. JD have some shares. This one's probably worth closing soon. I'm up 92% of max profit, 522 up 482. September, yeah, I think I'm going to take some profit here. That is, what is this? JD. So naked put combo. I'm going to close here. 522 trading for hopefully like 40 cents debit. See if I get out of here for 40 cents debit. Not bad, 41 cents. So that was 522. Close for 41 cents. I'll take that. Garbage. Naked put combo. Close out for 41 cents. That's pretty good, Phil. Yep, I'll take that. And naked put combo here. Closing 41 cents. Nice. All right, so get some buying power back. That was 300 shares at 556. Closed them out for 41 cents. It gives me a net win 5.2, 5.56. So it's over 500 bucks. Not bad. 480 on some. This was filled at 5 1/4. This was filled at 5 1/4. So $480 there. This one had a really good fill, up over 500 bucks on that one. Cover call at 36, 36, and 36. My break even on these 1,500 shares. Trying to think. Break even is somewhere around like $31, maybe 30 bucks. Let me check on my spreadsheet here. Break even 33.78, getting it called away at 36. I don't mind it getting called away. I'm not trying to be cute on this one. If it gets called away for, $222 a share at 1,500, still makes me some money. So it makes me $3,000. So could be worse. I'll just keep adding covered calls. Now the premiums are going up a little bit. This is an August 1st one, so hopefully I can be like a roll, or maybe it rips up enough to get it called away and I can roll it. Anything else? Dividend growth, advanced decline, market breadth, 50-day moving average. So no, I mean, the only reason I look at these market breadth indicators is if I'm timing like a top or a bottom. It's not quite there, not quite there, not quite there, not quite there. So we're just not there for like a top bottom yet, or I'd say like a broader top or bottom. Anything else? Costco, I want to take a look at earnings again next week. Anything highlights? Wednesday, Thursday, Friday. This is a big day, obviously. Lockheed Martin, Coca-Cola, Philip Morris, Home Builders, D.R. Horton, RTX. That's been a big runner in the defense and the aerospace defense space. Now Northrop Grumman, Pulte, Home Builders. So we have D.R. Horton and Pulte next week. Halliburton. Pentair. Sorry, I thought Palantir. No, Pentair. All right, next. So that is what day? Tuesday. So Tuesday, we have DR Horton. So that's DHY or DHI, PHM, We have Coca-Cola. Lockheed Martin is LMT. RTX. NOC in the aerospace defense section. Okay, yeah, I mean, we have a lot of earnings. This is actually an easier way to read it. Stock twits. Go to earnings and just see what's on. See just what's the quantity next week. So we start the 21st. We have a decent amount reporting. So slow to get started, 28, 69, 119, 146, 26. We have 388 companies reporting next week. Notables, Tesla's next week on the 23rd. That's aftermarket Wednesday. NEM is at Newmont. So Tesla's probably the big showstopper next week. T-Mobile, not too bad, but some earnings to play and look at next week. So I'll be looking to price some of those in. Okay, everything else looking pretty good. Fresh highs again in the portfolio for the year. That's not a bad thing. And I'll just enjoy the melt up. I think we still have a correction coming. It's just, what do I do with it? Honestly, at this point, a correction coming. We're so far above some of these moving averages that I would still think the market has a lot of support between this level, this level, this level, this level. At the very least, a pullback into this level is going to try to retest the highs. Maybe that's enough to offer another dip and just another melt up. But I'm just not sure. Like I'll pull back here, wait for a trend line break to get long, or I'm going to start selling a lot of options. That's really what I'm waiting for. If we get a pullback, I'm just looking to sell more options, position myself towards, April lows, or position myself maybe more aggressively. I mean, if I'm right and the market holds this level at 5,700, maybe I don't have to do anything here. But if I can position out here for a decent income, then I play this out to November, December, January, and see if I can pull in some credit and just have the market kind of remain stable. The scary part would be if the second half of the year we go into recession and the market's like, bye-bye, and then the broadening pattern comes to fruition and we're at fresh lows. That would not be fun. Fortunately, I would say that my 16 to 1 hedges and my 25 to 1 hedges and my 44 to 1 hedges could actually help me quite a bit weather that storm and limit some of that exposure. But if these are all worthless and the market just grinds and grinds and grinds, then it's going to be a trader's market, and it's going to be an income driven market, and we got to be able to survive either way. So we'll see. All right, everybody. I'll let you go for today. Appreciate y'all being here. Make sure if you've got available discounts on EdgeFinder, grab them. If you want to sign up for Pulver Alerts, grab them. And we'll keep fighting the good fight and grinding the markets. All right. Thanks, everybody. Have a good Friday. Good weekend. See you soon. Bye.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.